Welcome, Investorholics and friends, to another installment of the ETF Spotlight Review. Today we'll be taking a look at ROBO, which is the ETFs, ROBO, a global robotics and automation ETF. In a rapidly changing world where megatrends are drastically reshaping the way that we live and do our business, we should be keeping an eye out for these type of things. So megatrends are best described as powerful forces, either socio-economic, environmental, or technological, that have the potential to cause long-term structural changes to the economy and or society. So ROBO provides investors with access to this high growth and rapidly evolving mega trend. So robotics is the mega trend, and automation. ROBO Global devised the benchmark industry classification system to help investors navigate the emerging industry. So yeah, I think if you're interested in taking advantage of the new megatrends that are changing the world, definitely stick around and have a listen to the quick spiel on ROBO. Well, hello there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. So ETFs ROBO Global Robotics and Automation ETF aims to provide investors with returns that track the performance of ROBO Global Robotics and Automation Index by holding all the shares that make up the index closely in proportion to the index weights. The ETF employs a two-tiered equal weighting system of companies that operate in the 1 of 12 subsectors relating to RAI, such as manufacturing, 3D printing, logistics, and security. So there's quite an in-depth formula about how they actually select this index, because it's kind of like a sort of a semi-active index. So if you're interested, definitely check out the PDS before you buy into this one. The Y factor gives you exposure to the RAI technologies, because they're already disrupting nearly every industry in every geography. So ROBO Global is a recognized leader in robotics and automation investing solutions. The coverage team includes full-time financial and research professionals supported by industry entrepreneurs and academic leaders who specialize in global developments across the RAI supply chain. ROBO Global devises the benchmark industry classification system and helps investors navigate through emerging markets. As I said, this is kind of like a semi-actively managed type of index. So as with all these indexes or ETFs, only one of these gives you liquidity. So ROBO holds only stocks traded on recognized global exchanges, and the index includes filters on market capitalization and daily trading volumes, as well as individual stock caps to ensure that funds tracking the index do not become significant holders of any of the constituents. So they try to keep it weighted, so they don't overweight on any particular one company anyway. So definitely check out the PDS to get some more information on how that all works if you're interested in the ETF. Net asset value of $65.99 when I checked, trading just below that at $65.90. Market cap of $125 million, management cost of 0.825%. Like I said, it's a bit more expensive because this is like a semi-actively managed ETF. You get a small distribution. You get that in July of every year. Dividend yield is 0.78%, pretty low. As we're saying, Robo tracks the global robotics and automation index. Robotics and automation could be described quite easily as an unstoppable megatrend, as we sort of touched on at the start of the preso. The megatrends are going to be quite influential throughout the next decade or two. Major global companies are heavily investing in automation, which will reach across every sector of the global economy. Owning this ETF could make up for the lack of tech companies listed on the ASX. Gives you a bit more of a diversification, a broader net, so to speak. Robo would give investors diversified exposure to solid international companies with rapidly growing industries, within rapidly growing industries. As we always advise, before we make an investment, we should be doing additional research, not just look and buy at the first thing that we see. So have a look at RBTZ and also HACK. They cover similar or the same type of themes. So as you can see here, you're looking at the top 10 holdings in the ETF. Some of these companies I've heard of, and some of them I definitely have not heard of. So NVIDIA is pretty much the only one well, looks familiar off the top of my head anyway. So definitely not one. Pretty much the only one that makes news in Australia anyway, or if you're looking at that sector anyway. Pretty good performance since inception. You're looking at 10.97%, which is pretty good. Very solid, in fact. So I think you need to keep in mind that sort of these businesses are fast-paced, and I think they have the potential to change businesses and society. And some of these, once these pick up pace or momentum, I think they got the potential to change society quite rapidly. I think as we sort of go towards automation, you're definitely going to see all those repetitive jobs that people currently do fall away, and they'll be taken by robots. So the growth of robotics, will be driven by the efficiency gains on offer as robots perform, those monotonous tasks, the high levels of precision. So those things that people tend to just fall asleep at. So a report issued by Adzuna, which is a bit of a mouthful, on their website. So it's sort of a website focusing on jobs. They think that 1 in 3 Australian jobs are at risk of automation. So you're going to see a lot of jobs sort of go across to that automated field by sort of 2030. So you're going to see a lot of uptake of automation, and that gives it a lot of, you should see a lot of share price gain in this type of ETFs, and these companies also listed here in the top 10. So it's definitely worth a look at, I think, and you need, especially if you're a younger person, I think you need exposure to these type of trends. So definitely have a closer look at it. I think it's definitely something that should be considered. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left-hand side and caress the subscribe button on the right-hand side. As KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks, guys. See you later.